want to touch on the Nvidia issue. Now,
Okay.
I don't trade Nvidia, but wait. First of all, is it Nvidia or Nvidia? Peter makes fun of me all
Nvidia.
the time. Nvidia. Okay.
Nvidia.
And there's this tweet. This comes from Tier 1 Alpha, and what they were saying is that a friendly reminder that non-discretionary funds will continue to buy Nvidia simply based on its size, regardless of its earnings or any other fundamental reasoning. For around 50% of the investable market, fundamentals just aren't part of the algorithm. So this is something we've been touching on for the last couple of weeks. This idea that it's not whether a thing should be investable or not. It's whether the passive flows are directed to that asset because of its location within index funds. And so, if there's going to be passive flows that are going there because of people's 401ks or how this company is positioned within the SPY ETF or Nasdaq ETF or whatever it is, well, then they're going to get a percentage of that allocation when a dollar goes into one of those assets. It's gonna buy Nvidia no matter what. And so, if that's the case, and Nvidia is not getting out of these indexes, then this is a buying opportunity and we just have a temporary low, and we should rise higher from there. Uh, what's your thoughts on it?
So I'm very interested in sort of reevaluating NVIDIA from a fundamentals perspective. If I could share a tool that I use quite a bit here on my screen, if you can help me get that up there. Yeah, perfect. So this is a tool called Simply Wall Street. It's basically a valuation tool that allows you to do sort of discounted cash flow analysis on companies, and it does a bunch of other fundamental analysis sort of built in. And I love the graphics of this platform, but the valuation tool is also very helpful. We can make the argument that NVIDIA is overvalued from a fundamental perspective using a discounted cash flow model. But the problem with these estimates is that they are largely based on historical earnings growth rates that averaged around 49% per year on a rolling 5-year period. But this last earnings period, if we come over here to this chart, really tells us everything. This is the earnings history for this last quarter and obviously this last year. And I want to pay attention to specifically the earnings improvement here. It's
Wow.
over 700% in the last year. Now, I don't expect that NVIDIA is going to maintain that kind of velocity over the long run, but I am expecting a big increase in overall earnings expectations going into the future. So maybe we change that. That it goes from like a 49% 5-year average in earnings growth to something like a 60 or 80% increase in earnings growth. So it's very difficult. Like whenever these DCF models are used, they tend to use a historical average of earnings growth and then project that into the future. Take the discounted the risk-free rate and discount that against to the present time, right?
Right.
And so that net present value is sort of based on what we think it's going to do in the future. I think the difficulty here is knowing what NVIDIA's earnings growth is really going to be like in the coming future. And one thing I'm confident about is that NVIDIA is one of the biggest benefactors to the AI industry, which is not as hypey as I think other industries have been in the past. I think we're seeing a fundamental shift into a new tool, a new type of tool that changes people's lives. We were just talking about it earlier here, using AI to play with music. That we're still in this early discovery phase where some people haven't even played with ChatGPT yet, haven't even thought about using it. And the moment that they discover how much utility it has, they're suddenly ready to throw their credit card in and say, yeah, charge me $20 a month. Every single one of those companies that's going to build software in the space still needs to benefit from the graphics cards that drive this. And the demand for NVIDIA graphics cards is unbelievably high. And we're seeing that start to reflect on their balance sheet. So I think that this recent earnings report is obviously indicative of that. They beat on earnings, beat on revenue. The future reports and future guidance are also looking promising. I think at this point, what's happening is investors are like shaking out this idea of, do we think that this can continue? Personally, I'm still very bullish on NVIDIA. If there's any kind of retrace and any continued pullback in NVIDIA, that's more reason for me to personally want to buy some more. Not financial advice, let me throw that out there, but personally, I'm very much interested in continuing to add to NVIDIA.
I've been finding it. I don't know the ins and outs of actually barely any details about it. I'm only hearing about Nvidia through the grapevine. I did hear that they focus on GPUs, which and they're one of the few players in the space, which is why those things are squeezing up. But that other chips like LPUs that are specifically designed for AI and that are far more powerful are going to come out, and that Nvidia is not prepared in order to make those. I don't know what the if that's true or not. But what I do find interesting is that currently the current state that we have is that an AI language model can run Doom without a game engine. This I find to be absolutely fantastic, amazing that you could run Doom just using LLMs because it's predicting every frame the same way that it predicts the token in ChatGPT. So every movement you're
What?
seeing, yeah, every movement you're seeing here is an image being generated, just like in Midjourney or Dolly or whatever. That's what's happening.
Wow, that
Yeah,
is crazy.
yeah. I
Who
think this is
can't?
12 frames per second, but it's bananas.
That is bananas. Okay, so I mean, I we need to think about this for a second. What you're basically saying is that so did it just create like a video sequence, or is it is it based on real user input? You're
Based on
changing
you real
direction.
user input, and as they're moving, it then generates. Okay, if they put the right arrow, that means I have to generate an image that's slightly, and then load that, serve that image to the user.
That's a mind blow. Okay.
Isn't it?
Because it's reflecting an entirely different version of the game. Like it's important to understand that what we're looking at isn't really the game itself, right? Which has sort of the same physics boundaries or rules about the wall being there, things like that. Like there's a whole lot more going on behind the scenes of a game engine than what is being rendered by AI there. What is being rendered by AI is a prediction of what the frame should look like based on user input and its understanding of the way that the game looks visually, and it's re-rendering those frames 20 at a time. I think Peter said it's 20 frames per second.
Oh yeah, it could be higher than, yeah, 20 frames per second.
Yeah, so we're kind of like what we're seeing is kind of an illusion, but an amazing concept to think about that AI could be used to sort of re-represent those types of virtual environments as well.
That's right. And so the when people are saying that we're at the very beginning of what this AI could be, like the very beginning of this bubble,
Right.
the development process, we don't even know how we could put these things together.
Hmm.
And I'll always use the example of that JavaScript um, was around for way longer than people think before it started becoming like seriously used. I mean, now it's like half of everything is built on apps are built on JavaScript, and it was just like especially asynchronous JavaScript was just sitting on the protocol was sitting on the browser and no one was using it. And it's just when they figured out how to put them together, we're like, hey, we can make dynamic things on a website. We can send information back and forth. We could upload files, all the different things that came up from that without having to reinvent the technology. So who
Right.
knows what these AI systems can develop?
I totally agree. And, I know we've spoken about the Gartner hype cycle in the past. We're still in the innovation phase here. This isn't even close to the peak of inflated expectations.
Right.
It'll be a while before we get to a point where we're like, all right, this is everything AI can do. Because every week I'm seeing new things that are blowing my mind. And back to my point earlier, even the introduction of open source models like Facebook's Llama model, where we can now run these types of language models locally on our machines, have access to something that's open source that doesn't even cost anything. You still need a graphics card for that. You still
That's
need
right.
some power to run that thing.
That's
Who
right.
benefits from that, Tom?
Nvidia, exactly. Yeah. So I am, and so we have the structural flows that are there, right? And those things change very slowly because these passive flows are dependent on largely on, from what I understand, unemployment rates or the employment landscape. And so as long as people are paying into those plans, they're not thinking I'm going to buy Nvidia. They're just allocating the funds that then get purchased at the end of the week. Some of them are matched by their employers, and as long as that stays pretty stable, then we're good. Even if we get up to well, I guess that depends. The number of unemployment that we have to reach to where now we get significant reduction of those flows, or worse, where people have to sell those assets in order to survive, then we get the opposite will occur, where the forced selling, even if the company is good. But we should be able to see that coming a mile away.
Mm.
That'll be telegraphed from months ahead of time, maybe even a couple of years ahead of time. So until then, you get the structural flows, and then you have the beginning of the AI cycle. I mean, we'll have to redo TradingView charts because it's just going to be lines up for some of these companies. Man, it's just crazy. Like when oil went negative, you can't like have your chart go all the way back in oil because your charts gets all screwed, or you have to look at it on logarithmic scale.
I think that it's funny you say that. That's when logarithmic charts will become more popular.
Right.
Suddenly people realize, oh, that's what it's used for. It's when things go parabolic.